Hello everyone, this is Tristan here from 𝗠𝗔𝗥𝗞𝗘𝗧, and today we'll be going over some technical analysis for DXY and Euro USD. So before we start off, the first thing that we do at the beginning of the week is that we go into Forex Factory, have a look at the events that are going to be taking place for the upcoming week, and then we have a narrative set on what days we can expect high volatility, high inflows and outflows, or basically some erratic price action because of some news drivers that will be opening up. So as soon as we look at the timetable based on this week's news events, we can definitely see that we have some very important news coming up for on the day of Wednesday, Thursday, and also Friday. So we have a news-heavy week. We will not have anything major on Monday and Tuesday. We already had this meeting that happened for G20 on Sunday. Monday, Tuesday, we won't have any massive news drivers, but for the rest of the week until the end of the week, we have core CPI, we have retail and employment claims, and also industrial production and manufacturing index from Empire State. So it's just something to keep an eye out for when you're trading based on the news events. So you would want to trade after the news events happen because you can definitely see massive price fluctuations and inflows and outflows of volume, which can actually take you out of a trade, and spreads will widen, things will just go all over the place. So just this is always recommended that if it's a news driver, you just try to stay away from the market for generally for that day. But if you do definitely want to trade that day, you might want to avoid the timings when the news releases are happening. So maybe 8:30 CPI gets released, so give yourself like an hour after CPI, let things settle down, and then you look at the narrative, what price might be doing for the rest of the day, going into the PM session, and then you trade accordingly. Similar to that, you can do the same thing for Thursday and also for Friday. Majority of these news events always take place from like 8:30 until 10, so you should be able to trade relatively easy with a good risk management in the PM session, or just like right around lunch 2 p.m. But yeah, so that's just the news event for the week. We can look into the chart. We can just remove this for now. And so we are looking at DXY, and we start off at the weekly time frame like usual. So we can mark out our important levels, and then we drop down into the daily, down to the 4-hour time frame to mark out our range and also interest areas where we might expect price to be pulled towards or go towards. So first thing that we can see on DXY is that we have been going up for majority of the week and majority of the months, and now we are seeing some bearish price action, but that's just a small pullback, and that's expected because we are in an area where we have some rejection area forming up, and also we are tapping into a supply order block that is in a continuation from a bearish move or from the upside, and also we do have some relative equal highs, so we may definitely see some rejection. But that being said, we can also see it in a different manner, that yes, this can become our drive towards liquidity. So eventually for this week, we can expect price to move to the upside, take the highs, reject, and then maybe come down into the range. I'll just change the color to this so maybe you can see it a bit better. Yeah, something like that. So I'm expecting a drawn liquidity for the upcoming week or for the next 2 weeks or so to the upside, but then I'm expecting some sort of impulse above and a rejection. So if we are rejecting and we dropping down, bearish price action will confirm for me after we take this lows. Until then, we are bullish. So right now we're just seeing some sort of minor pullback in a manner that we may pull back down into the range, and then we can start building some liquidity to the upside, because there's definitely some stop losses sitting up here. We have taken up intermediate term high within the range, and we have closed above with a bullish candle here, and that generally tells us that there is volatility in the market and they are willing to push the price to the upside. So which it definitely means that we may look for some drivers taking price up here eventually into this order block. But yeah, initially on the weekly time frame, that will be my first drawn liquidity, and I'm expecting a sweep of that. So keeping that in mind, we can drop down into the daily time frame and we can have a look at a bit more detailed price action. So fixing the chart up a little bit, I would want to keep this high in the picture so we have an idea. So this was the price action that this is the price action that we have on the daily. So on the daily, when we were reaching this, we did have an inducement leg, and the way I would describe that as an inducement leg is that when price was driving up to this high, we did not take the high. We created liquidity right around the high, and then we just dropped below from there. And that was just basically generated liquidity for the up move. And that's generally helpful because this is a low resistance liquidity run from here until here. So this is all low resistance liquidity run, which was taken out with much impulsive price action. But this was a bigger area that we needed to get mitigated. So for that, impulsive price action took place after inducement leg, price pushed down, took the lows, and we can also see that on the daily we did not have a close below the low, and we have only a sweep, and then we saw some impulsive price action. This was the impulse we saw on the fractal break, and then prices pulling down. Now we do also see that there is a tap into the volume imbalance that was created around this rejection block to the downside. So we can see some price action, and looking further into this swing range. So for now, we will treat this as our current swing range because this is the low that took the high. So this, for first things first, we can remove this area, and we can treat this as the low that took the high, and this is the current high, which is not confirmed just yet. And the reason why I would say that is because this high was taken out like this, and now we may see some price action to the midpoint equilibrium, maybe into the deep discount, and then we can see some price action to the upside taking the highs. Or if we break down impulsively, we can look at this order block to get mitigated, and then we can start forming some price action to the upside. But we are definitely seeing some some downside move as soon as we open the week. And right now, price is moving into the fair value gap created right around here. So on the daily for right now, we can see that this is the intermediate term or an intraday time frame bias for the daily, that we can see something like this. So draw to the downside at least until to the equilibrium before we start to target this. And to target that, I would like to see some strong bearish candles close right above this price action around here. If we have strong impulsive displacement around here closure, and then we can be more confident in that area to be tapped with much more precise volume. So that being said, on the daily time frame, we can drop down into the 4-hour time frame, and we can have a look at what the price action tells us on an intraday basis. So yep, looking at that, this was the low that was, so that was the sweep on the daily, and this is a break of structure on the 4-hour time frame. That's okay. That does not mean that price is going to continue back down. We did want to see some displacement, and then we want continuation. But the next candle, we have impulsive price action, and then the low was holding, which means that we are now in the buy program. So on the 4-hour time frame, we can see some market maker buy model here. So that's the first. I can just change the colors into something like. It's a bit easier to see. Yeah, there we go. So accumulation, accumulation, manipulation, distribution. So just to quickly show you that. So price accumulated after it did the sweep of the lows on the 4-hour time frame, accumulated, and then we have a displacement to the, so we have a sweep to the downside. So sweep, and then we have displacement to the upside. So that's basically accumulation, manipulation, distribution. So that's the first. That's the reaccumulation around here. Then we have a distribution. Now we are at the point where we may start to reverse. And to see a strong reversal, this is the fair value gap that we had on the daily time frame that works in confluence with the 4-hour time frame fair value gap 2 around here. There we go. And we can remove this. So that's a 4-hour time frame fair value gap working in conjunction with the daily fair value gap. Prices driving towards it at the moment, and as soon as we have an impulsive break below this low, so we can just mark that out. That can give, and if we have a stronger displacement candle to the downside, we can expect price to start reversing into the discount zone. We can see some accumulation around here onto the equilibrium of the range, taking out the sell stops, and then we may see some sweep, drop down into the volume imbalance, and then we can start to reaccumulate and go to the upside, or we can just start seeing something like this, drive down, and then we can come back down to take the lows. But at this point, we do see that there is a sweep, and then this order block was already mitigated by this fair value gap, and we have a tap around here. So at this point, I would expect price to come down, form some structure, drop below the midpoint, come into the volume imbalance, hold, and then start moving to the upside. So that will finish the sell side of the curve, because we have the buy side of the curve that has already taken place on the 4-hour time frame. That will happen now. The opposite area will start to engage. So that's on the weekly time frame. So for now, on the intraday time frame, I do have a bias of bearish bias on the 4-hour time frame, and overall for the rest of the week, I do have drawn liquidity to the upside for DXY. Okay, moving on into Euro USD. We can go back up to the weekly time frame, and we can see that this is the opposite reaction that what we saw on dollar index. We have the opposite reaction of that here on Euro USD. Euro USD, first things first, on the weekly time frame, you do see some trend line liquidity that's created right around here, and we are breaking down impulsively, and the first point of interest can be this. I'll remove that. So that's the first point of interest. If we want to see some price action hold, then we may see some sort of price action just hold around here. We can come mitigate these lows, sweep them, and then we can start to impulse up to the upside, because this volume imbalance was completely taken, complete fill of that, and then we have bearish price action from there on. So on the weekly, I do have drawn liquidity, initial drawn liquidity for the weekly time candle to impulse down and give us bearish price action. So on the daily time frame, we can have a look at the daily here, keeping this low intact around here. On the daily, we do see that what we saw on dollar index, we have the same thing: accumulation, distribution, reaccumulation, distribution. Then we have a breakdown, accumulation, breakdown, reaccumulation, breakdown. So this is almost finishing up the whole sell curve, basically, by end the sell curve of for Euro USD. So we can definitely see some volume come through here, take out the lows, and then we can see some accumulation to the upside. Areas of interest at this point on the daily time frame will be, we have broken below this range. Two areas that I can see right now, this is a low that is unconfirmed for now. So initially I will mark out this as the breaker structure right around here, and current range we can mark as this high that took the low, and this is the unconfirmed low. So we can just mark this low as an unconfirmed low, which may or may not get to run, or we can start seeing some respect in price. And then as if price does not want to break this low, we want to see some displacement to the upside, take this high with some strength, reaccumulate around the equilibrium of the current range, and impulse to the upside. And we do have some sort of volume imbalance that is formed around here, but that can definitely get rejected, and we can start impulsing down for the rest of the day, going on into a couple more days, especially with the news drivers that we have on hand. Okay, so on the daily time frame, two areas that I can see is, the first area is here where we see some sort of rejection, but we do not have a tap. So that's a so that's a fair value gap that was formed on the daily time frame. I'll just zoom into this price action around here. So current price range, this is the current price range, and first fair value gap and the second fair value gap that I see is around here. That's number 1 and that's number 2. So two areas where I will be interested in taking some shorts if I'm looking for shorts on Euro USD. So impulse into this, and if we start seeing some rejection, I would see look to enter some sort of shorts around here. If we see some impulsive price action to the upside, we take this, then there is a possibility that we may also take this fair value gap impulse to the upside and then start rejecting from there. But this is a high resistance liquidity run because this high is higher than the previous high, which means that this high was already run and we have a displacement to the downside from there. So this will be my area to short with the displacement, of course. But at this point, I'm looking for either a long into this fair value gap and would like to short from the premium zone, not from here. If we start to break down around here and I have a strong body closure down here and then we impulse up into this first initial fair value gap, I'm happy to take it. Until then, if there is no displacement below this low, I'm not taking any short from here because price can definitely look to impulse to the upside and then come down. Okay, looking at the 4-hour time frame, we can find a better, we can start refining the area. So that's the range that we have on the daily. This was the low that we had marked out as a breaker structure, so all the way until here. So on the 4-hour time frame, the first thing that we see is the same thing. That's a 4-hour. We can just change this into orange. There we go. So that's a 4-hour fair value gap that works in confluence with the daily, and that's the same thing even on the premium zone fair value gap as well, which was actually tapped. We have a tap mitigation and then break down from there. So I know this is a little bit too many boxes, but just bear with me because you see this is on equilibrium. This is in the discount of the current swing range. So these two areas are low probability at this point for shorts, and then these two areas are high probability for shorts. Now, looking at the 4-hour time frame, we do see that there is a fair value gap around here which wasn't tapped, and it actually also acts as a balanced price range because this was the first buy side imbalance, sell side inefficiency, and that was mitigated right around here. So if you extend this fair value gap into the previous range, we do see some mitigation around here. Price went down from there. So looking at rebalancing of price action, this area feels like it is already rebalanced because there is no necessary need for price to come all the way up here to mitigate again, because this was the area that was inefficient and which was around here. We had only dropped down around here. So this needed to be mitigated, which was mitigated beautifully. There was no body closure in there, and then we saw some displacement down from there. So this area right now will be of high confluence for me rather than this area. But this area can become high confluence once we have a strong breaker structure to the downside with a strong body closure, and then we impulse up here, and then we give a small displacement down there. So we can start to look for some short entries down into these lows to take our take profits. So at this point, I'm looking at a higher time frame drawn liquidity to be on the downside. But if you want to play intraday price action, I would like to see some bullish close above here, set some alerts, and then look for entries, OTE entries. I might just change this into OTE entries around here, and then look for some longs into this fair value gap, keeping your stop losses below these lows, and then we can take our first take profit around here. And once this area gets mitigated, you want to wait for price action to either continue, or if it starts to break down, you want to move your stop losses to profit or to break even. If you have a displacement, I would like to see some short entries form in here, so then I can take shorts from there. So that's my analysis for Euro USD on the 4-hour time frame. So hopefully you guys enjoyed that, and if you have any questions, please leave a comment down below, and I'll be more than happy to reply back. And for the Discord members, I'll see you in Discord. Until then, have a good day and take care.